This is S14-10. It's a quick one on the calculation of free cash flow. So let's just go through it quickly. So this top part wants us to basically define what free cash flow is. So you basically take your net cash flow from operations, which we look at these options. Net cash flow from operating activities, that's what NCOA stands for. And then you're going to have your basically payment of cash dividends. You're going to have to subtract that out. And then you have your cash payments for planned investment. So that is the definition. You take your net cash flow from operating activities from your cash flow statement, you subtract out your cash dividends, and you basically subtract out what your capital investments are to kind of maintain the business or your planned long-term kind of investments, and that is what your definition of free cash flow is. So now let's plug in the numbers. So we see up here we have 144,000 is our net cash flow from operating activities, and then we had $10,000 of dividends, and we had $84,000 that we invested. And so when you subtract these two numbers, you get 50,000. Okay. So just a note, in the real world, sometimes you add back the interest expense into this. So the net cash flow from operating activities includes a interest expense. So some people want to have a free cash flow that is kind of not inclusive of the interest, just to see what the business generates on its own aside from servicing debt. And in this case, we use the total amount from investing activities, but there are sometimes where a business is investing heavily in growth, and so sometimes people want to just estimate what the kind of basic level of investment is in order to get a better idea what the free cash flow is for the existing business. So there are some adjustments that are made to this that financial analysts will do to get kind of a better estimate of exactly what they're looking for. So this is just a very basic kind of formula, but there are different forms of it and different versions of it.